Are you thinking about buying your first home in the next 15 years? If so, you need to do this before January 1st, 2024, or you may lose out on $8,000 tax-free. By the way, my name is Zamira Dunnet and I'm a local real estate agent right here in the GTA. And if you are looking to purchase a home in the next 15 years or have any questions about purchasing a property, my contact information is right there in the description. Please go ahead and reach out. If you have any questions, no questions are dumb, go ahead, reach out to me. I'm always here to help. What you need to do is go ahead and open a first home savings account before January 1st, 2024. The reason for this is because you'll be given the contribution room for 2023. You don't need the money to put into it. You just have to open the account so that you have this year's contribution room added into that account for you. The yearly limit that you can add into this account is $8,000, which means if you are planning to purchase a home, let's say in 2024, and you open this account before January 1st, 2024, you are able to put $16,000 into this account that becomes tax-free. If you open this account after January 1st, 2024, you'll only have $8,000 of contribution room that you can put into this account. Now, what is the first home savings account? It is basically the best of both worlds between your RRSP and your tax-free savings account. Each year, you're able to put a maximum of $8,000 into this account that becomes tax-free, and you are able to use it as a TFSA. So you're able to invest it into ETFs, bonds, stocks, GIC to help grow the money that you put into that account. And whenever you take it out to purchase your first home, it is tax-free. So wherever you have grown that money, that is also tax-free. Now, who is eligible to open up an FHSA? You have to be a Canadian resident. You have to be over the age of 18. You cannot be living in a home that you own or purchased a home in the last 4 years. And the home that you purchased to then take out this money for has to be your primary resident. You can't use it as an investment property. The way that they prove this is you have to provide a written agreement for the property that you purchased or you built on October 1st, the year after you withdrew the money. And you have to prove that you intend to live in that property 1 year after you have purchased or built that property. Now let's go over the limits. So each year you're able to put a maximum of $8,000 into this account to a lifetime maximum of $40,000. If you have a spouse, that spouse can also open up an FHSA and do the exact same thing. So you will have a total amount of $80,000 if you put in the full contribution room into this account available for you tax-free when you go ahead and purchase your first home. If you aren't able to put in the $8,000 each year, it rolls over to the year after or for years to come. But there is a maximum availability of $8,000. So let me give you an example. Let's say you open the account in 2023 and you put in $4,000 before January 1st. That means you only put in $4,000 instead of the $8,000 that is available for you for 2023. Now in 2024, you then have the ability to put in the $8,000 that you have for that year, plus an additional $4,000 from the year before. But it maxes out at $8,000. So you can't put more than $8,000 in for the year that you missed. This is exactly why you need to open this account before January 1st, 2024, so you can have this contribution room available to you if you are planning to purchase in the future. Now, if you over contribute, you will be taxed 1% per month on the over contribution of the account. So let's use the same example we just did. You have $8,000 available for 2024 plus the $4,000 from 2023, which gives you an $11,000 contribution room for the year of 2024. If you put more than that, whatever you put in additionally, that will be taxed by 1% each month. So you really don't want to over contribute. Now let's say you don't claim the deduction for the year that you put in the money. you can claim it in future years. So let's say in 2024, you put in that $11,000, but you don't claim it. And let's say you remembered in 2026 that you didn't claim it. You can claim it in 2026 and still get the tax benefit from it. Like I said before, this account is just like a TFSA. So you can put in money into your bonds, into ETFs, anything that you put the money in like a TFSA, you can also use it in the same way for an FHSA. And let's say you don't purchase a home in the next 15 years and you don't take out this money in any way at all. It just sits in this account. It grows in those 15 years. That money would then move to your RRSP without any penalties or any issues at all. And I hope you know, in an RRSP, you can take out a maximum of $35,000 as a first-time home buyer to use towards your first home. This money does need to be paid back in a maximum of 15 years, and each year a portion does need to be paid back into it, but it's still another incentive that you can use towards a first home and your down payment. I hope this video gave you some great information on why you need to open a FHSA today or just before January 1st, because that contribution room can really help you when you are going to purchase your first home. You don't want to miss out on this $8,000 tax-free. Thanks for watching, guys. I make a video like this every single week, so if you enjoyed this video, please go ahead and like the video and subscribe to my channel. Again, if you have any questions at all, my contact information is right there in the description, so please go ahead and reach out. I'm always here to help, and we will see you all next week.